Welcome to Think Smart with TMFG. Today I have my special guest host, Carlo Cansino,
Hello.
and we're going to be discussing, I was over on a trip to Europe, and I'm going to be discussing some observations I made over in Europe. I got to do a trip to Spain, and I went to Barcelona. Have you ever been to Barcelona?
Never been to Barcelona. On the bucket list, though.
Yeah, worth going. So if anyone ever
Okay.
wants to do a trip over to Europe, that's one of the nicer places I've been. There's this great church in Barcelona, and it's called the Sagrada Familia. My Spanish accent is very poor.
You were only there for a week.
Oh, yeah, for a
We'll
week,
let
so
it
I haven't got
slide.
it yet. The most interesting thing about it when they talked about it's beautiful. It's insane when you look at this church and the size of it. It's just absolutely gorgeous. And they talked about the architect Antonio Gaudi, and he died in 1926. And when he was designing this church, he knew there was no way he would ever live to see it built. It's a very different thing. You know, we're very short-sighted. Everything we want to see results to
Instant
everything.
gratification.
So you can imagine
The-
spending your life on this thing and saying, "Well, I'm going to be dead by the time it's done, so I can never even see my accomplishment." So a very interesting concept on how people think in there. I was also in a winery there, and when I went to the winery, they had 41 kilometers of tunnels underground in this winery, and the winery had been around for centuries, and so for these people to create this infrastructure around this, the forethought of these people was incredible. You know, people run businesses nowadays, they're saying, well, where am I going to be a year from now or 2 years from now? Could you imagine thinking, okay, where's this winery going to be 200 years from now when my great, great, great grandchildren inherited? I want to make sure this is going in the right direction.
Exactly.
And when you go to Europe, you find it's a different thought process when people think that way. You know, I'm going to come down here in Toronto for a bit, but when you go to the coasts of all these places,
hmm
when you travel the world, you have these beautiful coastlines,
hmm
and people have thought about the future. And you go downtown Toronto, it always drives me crazy. Everything's been sold to condo developers, so
Right.
it's no long-term beautiful situation. It's all how can we make money right now, and that seems to be where things are going. You go to a place like Egypt in the world, and think of how the forethought of these people creating these massive pyramids. Again, they're built to last centuries and centuries, and that's how their brains work. So, let's talk about investments now.
Sure.
So, how have investments changed over time?
Well, with investing, I mean, obviously, there are different types of investors.
Yeah.
You get the ones that are the buy and hold, and they want to see their investments grow over the long term. But then you get a lot of people who are do-it-yourselfers, who are looking for that instant gratification, trying to make a quick trade to make a quick dollar.
It's funny, years ago, when we used to have people that came in stock portfolios, there were lots of, I'll say, old ladies that came in, let's say, with Bell stock.
Sure.
And they bought their Bell stock. They worked for Bell in the 1950s, and they bought their Bell stock. And they would come in with their certificates. And when there was a meeting, they'd actually attend the annual meetings because they'd be. Could you imagine attending an actual meeting for a company? But they'd go and they'd have their votes, and they want to be very involved in how Bell was doing over time, and they'd want to be involved in if there was an idea where you're going to put some money in toward infrastructure or create new lines or everything. It's going to not pay out a dividend this year because we really want to put some money into that. They would be all okay with that because they really bought into the idea
hmm
of I'm going to buy this stock. I'm going to hold it till I die, and I'm
hmm
going to live off all the dividends along the way in my life. And that's how things used to be. Again, too, back at that time, trading stocks was very expensive and
Right.
complicated. And so no one wanted to go and buy and sell stocks because think of it, there used to actually be certificates for a
Right.
stock. So if you want to you wouldn't call someone, you have to walk into your
Yeah.
person with your stock certificate, hand it to them, sign the back of it. They'd have to send it off to someone else. It would take about a month and you get to sell your stock certificate. So it wasn't that easy, right?
Right. And you see that, I mean, when you had the share certificate, it was literally ownership in a company. And that's what it is when you have a stock. You are owner in a company. Whereas now with the short-term trading, ownership in a company is more about just holding an asset to try to make a quick capital gain by buying in and selling quickly to get a capital gain, but not actually understanding that you are buying a company that creates widgets, provides services that people buy.
It doesn't feel real anymore, does it?
No, not at all.
It's just it's a number on a sheet.
Mhm.
You can understand why people like real estate so much because they say that I can go and see my piece of dirt.
Yes, you can touch a window, you can touch a door, and it's there. It's tangible.
Yes, it may be a piece of dirt, but it's a piece of dirt I can go visit, and
Yeah.
the number on a sheet isn't the same. So that's been a change.
Yeah.
Um, Companies have trouble thinking long term because, again, what's changed in the marketplace is a lot of the money is controlled by things like pension plans and
Yeah.
mutual funds.
Hmm.
So, again, the old lady who holds the Bell shares is no longer the holder of it. Now it's going to be a pension plan. And the pension plan is trying to answer to the people who are their bosses.
Hmm.
If you have mutual funds, they're out trying to answer to their bosses. So their main concern is, how can I still have my job at the end of this year? It's not
Right.
how that company's going to do 5 years from now. I want to make sure I still have a job at the end of this year.
Exactly. Yeah.
And how's that done? Unfortunately, performance.
Yeah. No,
Right?
it definitely has an impact on performance when you get constant changes like that.
It's funny, you see a lot of good company, even Asante. We're going through Asante. We're going to think that we're going private.
Yes.
A lot of great companies are going toward that private area because the scrutiny of the market makes it difficult to provide a very high-end service,
Hmm.
right? Because if you're publicly traded, when you try to provide a high-end service that may be more expensive to provide,
Hmm.
your shareholders are going to come and go, well, I just want to make more money,
Right.
right? So, we deal with private companies and people who used to manage their money, certainly a private company, because they don't have the public scrutiny of always trying to, make the most profit and pay out the most dividends per share.
Right.
Companies are more based on, let's create a great experience for client.
Right.
Do people ever admit to short-term performance?
God, no.
Liking?
No. Well, people admit when they make a killing, but we'll never talk about when they got killed in the
Yeah.
market.
People are always, yeah, I'm a long-term investor,
You're
but
right.
every time we go for a meeting, I always say, well, can you check my performance since the highest point in the
Yeah.
marketplace? And it's such a tough question because from the highest point, by definition, you're going to be worse than the highest point in the
Of course.
marketplace, unless it was today,
Right.
right? It's always going to be a negative performance,
Hmm.
and they're not on a regular timeline. They just look at the highest point the portfolio ever hit,
Hmm.
whether it was 3 months out, whether it was 9 months, whether it was a year and a half, whatever that timeline is where they want to judge their portfolio from. So it's a unique question that you get quite a bit, right? And it's not consistent. It just goes to say, it's not a timing period. It's just, when was I at my highest and where am I now?
Right.
They always talk about things like planes and boats and anything that's going over long distances.
Right.
And it's funny, if you're on a boat or a plane going across the ocean, there's very little time that you're ever pointed toward your destination, right? You're
Right.
going to get to your destination, but sometimes you're going to have to go a little bit north of your destination. And unfortunately, sometimes you're going to have to go a little bit south of your destination,
Right.
which is as in the markets.
Right.
You're still going to get to that destination at the end of the day, but there's a lot of wavering in between.
There are
And
headwinds. There are things that are happening in the ocean that are pushing you off your
there's going to be
original plan.
storms. There's going to be
Yes.
all this stuff that happens along the way, but you're going to have to make adjustments. And from when you start your trip, you're probably even you can't predict all those changes you're going to have to make along the way. As they happen, you're going to have to make adjustments.
Right.
And portfolios are much the same. We have an end goal for our clients to get to, and our goal is to make that end goal safe and sound. And our goal is not to make sure that every time I'm heading 1 degree off, I'm really worried about it,
Right.
right? Because it has a purpose in the mind. So, again, that's one of the things we talk about with time. Always keep the end goal in mind, and things will go fine.
Absolutely.
Well, that brings us to the end of Think Smart with TMFG. Thank you very much for joining us.
See you again.